morning. My name is Thomas Abraham James, President and CEO of Pulsar Helium. And Pulsar Helium, as the name suggests, it's all about primary helium. And we've got our flagship project, Topaz, in Minnesota, USA, and then our two new projects in Greenland.
Tom, good to see you, sir. Look, obviously new news, obviously raised a bit of money recently and picking up a bit more land. Tell us about why picking up more land, Bert, first of all.
Yeah, look, we've been operating now in Minnesota since 2019, and with the results that we've obtained from our Topaz project, from Jetstream, certainly incredibly encouraging. High concentration helium, naturally flowing to surface. And we've gathered a lot of data, which I guess you could say is behind the scenes, seismic data, gravity data, building up the model. Why is it there? And we've certainly found that this is not an isolated occurrence, that it does actually extend. And this particular acquisition is a very good fit, so that we deem this area to be highly prospective. It's an all-share deal as well, so we can concentrate our money into Topaz. And no, look, I think that it's a lovely addition. So we started off with this area around the original discovery, and now we're broadening our footprint.
Okay, right. So that tells me the recent stuff, and I think, but I'm kind of more interested in the kind of the kind of commercial realities of what exactly you've got. So in terms of the kind of laboratory gas analysis, can you tell us what you've got?
So I guess as background, most helium is produced as a byproduct of natural gas. And where our company fits in is to try and break that mold and to have a primary helium occurrence, where helium is the primary economic driver. So with the gas analysis that we have from Jetstream, it's the gases present are CO2, helium, and then you have nitrogen, and then you have very trace amounts of hydrocarbons there. So what we're seeing is helium results up to 14.5%. To give that some idea of context, you could think of helium as a bit like you can precious metals, that grade is king. You never get a pure 100% gold sample, tons of that. It's the same for helium. It's always mixed with something else. And so in the industry, the deemed cutoff is anything with 0.3% helium or more is interesting. 14.5% is just incredible. It's off the charts. And so the knock-on effect to that is that, yes, primary helium, so that's the primary economic driver, where it wouldn't be a byproduct. The other thing is that the amount of overall gas in place that you need to find would otherwise be less than, say, if it was low grade. And then there could be a positive knock-on when it comes to processing, because the amount of gas that you need to treat in order to get your final product is also less.
Okay, but so how do you go about modelling something like that across the reservoir, right? You've got Jetstream 1 and 2. You've got to maybe start talking to the market about the process of going about understanding, how much you've got, and so you can sort of help me with some of the assumptions that you're making in terms of these production forecasts.
Yeah, certainly. So with the resource that we have contingent and prospective, and contingent is like the higher classification there, the less risk component to it, and that is isolated around where we've drilled. And so the third-party engineering firm that does the resource calculation, they say, okay, within a certain well, there's a radius, an area of influence where you get that contingent resource, and then the broader area outside of that prospective is takes into account not so much the wells, but more the geophysics, so the seismic mapping the reservoir, and then making assumptions based on the gas concentration, and then extrapolate it further across. And so that's why with the drilling that we're about to embark upon, drilling up to another 10 wells, is so we can then de-risk that broader area and bring up its level of classification.
Right, and part of that's obviously going to be looking at, obviously, as we just talked about, the reservoir size or life, but also the kind of decline curves. So, and obviously, the more holes you drill, the more things sort of change underground. So, again, what's the process of trying to manage that field?
So with the flow testing that we've conducted to date, so we've done that over a period of time, so over a week or so. With the additional wells that we're drilling, we'll also be doing the same. So I guess the difference between the wells that we're about to drill to what we have drilled is jet stream 1 and 2 have been set up for production, so they could be plugged into a helium processing plant. The wells that we're about to drill are purely for resource, so they wouldn't be used for production, but we would be able to get from them the pressure data, the flow data, the gas composition. That's all required for that resource calculation.
And what about, how does water come into this? So far flowing without water, I mean, has that impacted your view of the reservoir integrity and I guess long-term maintenance requirements?
Yeah, look, very happy with that, to be honest, because water does complicate the processing. So we do have dry gas. Then there's also, sometimes you get an environmental concern. Okay, you're then starting to empty an aquifer. So what is the knock-on effect to that, and what do you do with the water? We don't have those issues. So certainly with what we've drilled to date. What it does do is that you get a hydrostatic head with the water, so that we see this other gas deposits and so on, that can increase your pressure, therefore your flow rates and so on. We don't have that. Ours is all natural flow without that hydrostatic head. But what we're still seeing is we're seeing flow rates in excess now of 1 million cubic feet per day, so it would appear somewhat unnecessary, particularly with the helium concentration that we've got.
So no compression at all?
That 1.3 was compression, so
that was with compression. Okay, understood. And in terms of just again coming back to the original question of sort of understanding what you've got, I mean, what role does CO2 play in the kind of potential modelling? And can you sell it? Is there a revenue stream attached to it?
Yeah, look, well and truly, we've put it into our economic modelling. It appears that would be a byproduct. The broader macro picture for CO2 in the United States is that it is quite fragile, the supply at the moment. So there's a major source of CO2 is more or less come to the end of its life. And where we are in northern US, in Minnesota, that's quite displaced from where you see the CO2 production, or the major CO2 producers. So the local market there is quite significant for CO2. We have obviously spoken to groups that have an interest in obtaining the product, and the appetite appears to be very, very much there.
And in terms of the kind of, where are you hoping to kind of sell this from? Are you still doing the work on that arbitrage in terms of like wellhead, or are you going to store this yourselves?
What we would be doing is we would be selling it off immediately to a distribution company. We don't want to get into the distribution. So for the CO2, which is a bulk commodity, so then that would be going off most likely to a distributor somewhere. Whereas the helium is different. So that one is the ability to go directly to the end user, because the volumes are smaller and you don't have to worry about different canister sizes. So the bulk big users of helium that need liquid helium and big containers of it, the anticipation is to be able to sell directly to them.
Okay, this coming drill program, I mean, how have you done the targeting for that? In terms of, is it the Timberline program you're going to be looking at? Is that right?
Yeah, Timberline, that's right, a local Minnesotan contractor. And so with that, we have existing data out there, so seismic data, gravity data. So it's certainly not wildcat drilling. So it's, I would say, I could definitely sleep well at night saying that we de-risked these drill targets as well as we could have. And we'll be, from where we've already drilled, stepping out methodically, going further and further afield from the known into the broader, more area that, not unknown, but needs that clarification that only drilling can provide.
The current targeting is great, but as you do more drilling, that data will kind of maybe change your mind in terms of the locations of the program and process, right?
Yeah, look, it will be dynamic to an extent. We do have the existing data, as I say, so the geophysics, so that one will be guiding it. And then once we get drill results coming in, then it may influence. And we do have that ability to be quite nimble as well, should we need to. Yeah, at the moment, as I say, like they're pretty well defined where we need to go. And what we are aware of is that the helium is the area of interest. The helium-bearing zone is quite broad.
And so the new land package that you picked up, that doesn't kind of change anything for you?
No, look, this is how to put it. Same but different. So it is further afield. So it's about 35 kilometers west of Topaz, and then it extends for another 150 kilometers beyond that. And so where we are at Topaz is the geology, which I won't try to get into too deeply, but that is it's a fractured basement style place. So the reservoir itself is a basement rock with fractures, and the gas is contained in that. What we're looking at over to the west, this area that we've just announced today, is that it's the source rock for the helium is the same, but the actual reservoir, which is to be determined, but what we've modeled, is actually a conventional sedimentary basin reservoir with then sealing units above that. So look, instead of being caught in the fractures, it could be then over to the west, trapped in a conventional sandstone reservoir.
And remind me, so talk to me about the kind of depth intervals as well.
Yeah, look, the depth we're looking at, so roughly going from about 2,500 feet down to 5,000 feet is the area of interest.
Right, and then back to kind of proving up size and scale of this thing. What does that look like in terms of a PEA? Trying to put some economics around this thing for the market.
With that, it's something that's, look, the resource update will occur once the drilling is completed. So yeah, with any luck, that'll be sometime in Q1 that we should have that there. At the same time, modeling being conducted by Chart Industries on taking all the flow data that we've got, the gas compositions, feeding that into a conceptual plant design, and then that will all culminate in an economic assessment. But in terms of calculations of X millions or billions of cubic feet at X% helium, and then doing a calculation on whatever price, that can easily be done. However, the preference is for that to come from a third party, and then we'll publish that to the market in due course with different sensitivities.
Okay, and you're finding, obviously you've raised some money recently, but are you finding that the conversation, the narrative out there at the moment with helium's being classified as a critical material now? Does that help?
It does. What's nice is that helium as a commodity has certainly matured over the decade or so that I've been involved. We've gone from clowns with party balloons to now people truly understanding its role in technology. The rhetoric, what we're hearing out there about AI and semiconductors and so on, and how helium is integral to their fabrication, and then a lot of new applications for helium as well. And it's all geared towards very much the high-tech industry. And so what we're seeing is that with increased demand out there, just the world's seeing just how truly fragile the helium supply chain is. You've only got a couple of major producers, and those are all natural gas plants. And then there's a little bit of helium, which they strip out as a byproduct. So if you picture yourself as a semiconductor manufacturer and you want to have more helium, it's very difficult to get because there is no spot market. And just on the scale of economics for natural gas production, are they going to produce more natural gas for the sake of a bit more helium? No. So without that flexibility, it does impact the end user very much. And it's quite a small overall cost for them, but a very important component of their overall business. So that's why we start to see things like, pricing. How important is that compared to their overall business maintaining its output? And so, that's where we fit in. So helium, primary product, hopefully all goes according to plan. And we provide something that the market doesn't have at the moment, which is a little bit of flexibility. Instead of a 10 or 15 year take or pay contract, the ability to have something which is a little bit more dynamic. You need more at this time? Okay, we could do that potentially. Spot market, what a fantastic thing to have. So, that really goes into what you mentioned about strategic, because at the moment, there is no large strategic helium source. It's all just this rather clunky and ugly byproduct model.
But here's what we've seen recently, and look, everyone's been talking about it for the last 6 weeks, which is obviously the US DoD and Apple subsequently investing into MP materials. $400 million and $500 million, respectively. Where what that's done for people like MP materials is obviously there for all to see in terms of share price, but also more importantly in terms of setting a floor price for things like NdPr. Right, and I think that's been the kind of seismic shift in the space. It's affected everyone's stock positively as a result. For helium as a critical material, Is it going to need something like this? And can you see, given the use cases, can you see moves like that from government, US, EU, and players like Google and Tesla and Meta and all of those other tech companies who perhaps need to have a little bit more certainty in this, what is quite a small and competitive space in terms of supply?
I can certainly see it as a possibility occurring. I think that still a little bit of education out there, because helium is always thought of as this byproduct. And should we certainly show that with Topaz, we get it up to a resource of a good size up to this next phase of drilling, then I think that's when the light bulb moment may occur and say, well, look, okay, here it is. This is possible to be able to disrupt a sort of supply chain and therefore garner that interest, and I think at the moment it's just because it's so new and because it hasn't occurred yet. I think that the first mover potential is there. It hasn't occurred yet. The other thing is that it's trickier than a lot of other commodities because helium doesn't really like to travel. That's the other thing. So the party balloon analogy, it's shriveled up on the floor after a few days because it likes to leak through everything. So at the moment, you can't store helium. You can't just have a large repository. The actual storage is the reservoir itself. And so to have it in the US, the largest demand case for helium is there, that's a big advantage too. Whereas if you were to ship it internationally, which does occur, so if the US is getting imports from, say, Asia, if it's in the container for more than 4 weeks, then by the time it's arrived in the US, you could probably expect there to be a decent amount of loss there. And so that impacts too. So look, long way of answering your question, but for all these reasons, I really do see it as a distinct possibility that, the end user case, they may want to get involved.
Okay. So the location of your asset is an asset to you, but as is the grade. And I think just to help me understand it better. So grade is great because it suggests higher margin, because it's not costing you, it costs you what it does, but companies like to come on here and talk about, we're a lowest decile, lowest quarter producer, which is lovely, but it's the other kind of aspect to that is around sort of technically around the ability for the company to actually solve for that problem. So can you talk about maybe the kind of like separation and technically why you think that your grade actually helps you?
We've seen with a couple of other helium companies out there that a few cases where they've gone into or attempted to get into production, and I guess you could say there's an element of learning from their experience, is that ultimately production has not been terribly successful for them, and they've had significantly lower helium concentrations than we have, and therefore there is a added layer of complexity with the plant. Your recoveries need to be exceptional. The other thing is that they've looked at relatively small scale plants, and I get it, to try and get into revenue as quickly as possible. I guess you could say our mindset is quite different. We are not looking to go into some modest production just to cover our expenses type thing. We're actually looking at building up this project to a size that justifies material helium production. We've aligned ourselves with a company called Chart Industries, an American company that designs and fabricates industrial gas equipment. So anything from refineries for natural gas to cylinders that you'd see at McDonald's and everything in between. But they are pretty much the gold standard. And so the reason for going for them is that, okay, the gas that we have, we know that it's readily upgradable, that you can process it. There's none of the deleterious gases in there that make it problematic. The gas is effectively quite clean. It's quite a simple mix. And then to have a plant design that is bespoke, that is fit for purpose for our project. And then the intention then is that when we say that we, at the right time and when it happens, that if we get to that production, that we can actually meet our production guidance. And that for us is key. Obviously building trust with the market, but also most importantly with the customer that, should there be an offtake in place, that it will actually be fulfilled. Yeah, that's
Okay,
the.
so the kind of predictability around the kind of separation and liquefaction as a higher grade project helps a lot, I guess. Again, sticking with commercial, you have stated previously that you're looking to be development ready by the middle of next year, 2026. Has anything changed your mind?
Yeah, for us, what we see is that with this drill program, having that completed, with any luck, first half of next year, we'll have crunched through all the numbers, have the resource update, have an economic assessment, and then at that point in time, should everything look good, then be able to say, okay, can we make a decision to go to production? If we get to that point, and if it's all going successfully, then it'll be 12 to 18 months to effectively fabricate and commission a helium plant and a CO2, so combined helium and CO2.
Right. Then financing. Given everything we've just said, what is your expectation around who funds this, how you fund this?
We would be looking at debt finance for the capital cost. The capital cost for a helium plant is significantly less than, say, a mining operation. So you'd be looking at, on the lower side, you're probably looking at about $12 odd million for a helium plant. On the higher side, you're looking at 50 to 60 million, depending on the scale. What we actually announced the other week was that a bank in the US, in Michigan, who is a shareholder of ours, has put out their interest in providing $12.5 million should we get to the point of needing capital. So certainly non-dilutive financing, having offtakes in place before that point, and then go off into production and then pay off the debt with the revenues from the helium plant. That's our model.
Right, and I'm trying to work out some of the how many new entrants there are. Obviously, it's a byproduct from the petroleum sector, maybe, but there's no predictability in that. For groups needing that kind of predictability of supply and access, do you think you'll be able to get a few of those interested sooner rather than later, subject to and all of those wonderful things, as a kind of swing producer for them?
We've met with a lot of them and had discussions about, informal discussions about the possibilities that Pulsar may be able to provide. And it's certainly been met with a lot of interest and a lot of support that, and good wishes that hopefully it does occur because of that existing lack of flexibility right now. So for us to go and have any formal discussions about offtake now, I think is a tad premature. We know that we're onto something good, but what we need to know is should we get to production, what would be the production guidance? How much could we actually achieve here? So that when it comes to having offtake agreement discussions, we can talk about, material items here rather than hypotheticals. And so that's why I'd like to see this next phase of work completed. And then sometime, hopefully in the first half of next year, we could be at a point to have those meaningful offtake discussions.
Okay. And so between now and then, what are you saying to your team in terms of kind of the biggest technical or operational risks for you?
Biggest risks for us would be, I'd say that, drilling is never guaranteed. I always, if you hear of a company saying that they've got a 95% chance of success, you usually run for the hills. Geology is not like that. Mother Nature is always somewhat unpredictable. But as I mentioned earlier, I'm very confident that we've de-risked this upcoming drill program as best we can. But the truth will be in the drill bit. We do know that the helium zone is quite extensive. So we've seen that in other locations where there's been accidental discoveries of helium-rich gas. So we know it's not an isolated pocket. We've got a very good handle on the reservoir qualities and what to look for as the identifiers in the geophysics. So, look, there's always risk attached with that, but I think we've mitigated it as best we can. Otherwise, the technical risk for going into production, look, we already know that there's an offer on the table for finance for it, which is brilliant. So that's a de-risking event. Chart Industries, whatever they come up with, extremely high level of confidence in what they come up with and produce as the solution for processing. And then the market itself is really quite fabulous for both CO2 and helium. So to be honest, I would say that for us, apart from good old-fashioned geological risk, I think that if we can execute this drill program successfully, that the company's in a very good position.
Okay, and like oil and gas investors will sort of understand this, but maybe the mining audience who potentially watching this won't. In terms of doing comps, oil and gas is lucky it can get into production relatively quickly. You haven't been at this long. You're targeting sort of development by mid next year. What are the kind of profiles that you can sort of point people to in terms of where the value, where the price moves start happening? What have you got to get to? Is it build or is it actual production?
I think that it would be, for us, like, we're still growing. I think that there'll be a lot of interest with the drill program as we get results coming in, and they'll be quite thick and fast. So the drilling starts at the end of this month, and then we'll be going through till Q1. So regular drill results, and I think each time that we can show incrementally that it's getting larger and larger, it'll be deemed as a positive. I think that then that will culminate in the updated resource, which will then show, how much in the contingent and prospective reserve resource categories. The economic assessment, another big milestone. And then should we get to the stage where we're then discussing offtakes, I think that's just going to be incredibly exciting. And then really the plant build phase, should we get to that, 12 months, 18 months is not that long. And in the meantime, we do now have this additional area that we would be looking to make additional discoveries in. So I think scale is important with this, is that a few of the other helium occurrences out there are quite finite in their size. If we could show that Minnesota has the potential for larger scale production, I think that would be just, that'd be a really wonderful scenario, because at the moment, quite frankly, it doesn't exist. I think there's a lot of potential catalysts out there, and really, for anyone that's looked at us, like our news releases have been coming out thick and fast, and we want to maintain that momentum because the market interest is there for these products, and we're off to a great start.
Okay, thick and fast for the next 12 months. Tom, appreciate the update. We'll see you soon.
Okay, nice to see you, Matthew. Thank you.